Hello dear friends, my name is Clive Thompson. I'm here to give you the stock market and investment and economic and financial report for today, Thursday, 14th of August 2025. If you're wondering about Tigger, who's behind me, he's potentially one of my financial advisors. I sometimes find I get better advice out of a stuffed animal than I do from some advisors. Last night, the Federal Reserve policy landscape underwent a dramatic transformation when Treasury Secretary Scott Bessent made comments suggesting that a 50 basis point cut could be possible given the recent weak unemployment and employment numbers. The probability of a September rate cut rose from 94% to 100%. So the debate now is no longer about whether there will be a cut or not. The debate is now about whether the cut will be 0.5% or 0.25%. So we now have the administration clearly signalling to the Federal Reserve its preference for accommodation or rate cuts. However, Bessent's comments appear to reflect a genuine economic concern rather than some sort of political pressure on the Federal Reserve. And that's particularly true given the awful employment data we saw last week, which shows significant weakening in job creation and it showed rising unemployment levels. Thanks in part to the near certainty of a rate cut, the S&P and Nasdaq both achieved another record closing high. Why does this keep happening? Well, it's the wall of money which is looking for a home. The US government debt gets bigger by the day, the government gets poorer, someone else gets richer, they need somewhere to park their money. It seems that the wall of money is hitting stocks. So the Dow Jones Industrial Average surged 460 points, and it was a pretty broad-based rally with the advancing issues outnumbering declines by 4-1. New highs were 630 stocks and only 56 made new lows. Paramount Skydance led the gains with a spectacular 36.7% surge. That followed the announcement that it's got the exclusive UFC broadcasting rights. But basically, what this shows is that the value of media, if you've got the media that people want to watch, is going up. So I can see there's a lot of value in this. And obviously people outside are seeing that Paramount Skydance has got something very exclusive and useful if people want to watch this. Otherwise, in US stocks, Apple gained 1.6% after reports that it's going to start expanding into AI-powered robotics and smart home devices. So maybe a little bit of competition for Tesla's robots there. Otherwise, technology giants, many came off very slightly over the session. Nvidia, Alphabet, Microsoft were all slightly lower. Nvidia was down 0.8, Alphabet 0.5, and Microsoft dropped 0.3%. But there was one stock which performed terribly last night, one technology stock, one AI stock. That was Coreweave. Coreweave had the most dramatic decline last night of all the stocks. It was down 21%, and this AI data center operator reported larger than expected quarterly loss. So the size of the decline, 21% in the share price, seemed surprising for a small miss on the earnings per share for the quarter. And it's only one quarter, don't forget. But what this is showing is the market is very sensitive to earnings disappointments, particularly in high growth technology companies, especially those operating in the artificial intelligence space, because valuations in this space are based on future growth expectations rather than current profitability, and any slight tweak in that future growth expectation can drive the stock down substantially. And let's not forget, we've got Nvidia's results expected I think it's towards the end of this month. Nvidia will bring out its results on 27th of August, and the market is expecting absolutely blockbuster results. So we'll see if we get what we're expecting or better. Last night on Wall Street, there was a bit of sector rotation. Healthcare stocks were the clear leader in the sectors, up 1.6%. It has been one of the worst performing sectors so far this year. And another area which did very well last night was the small cap sector. The Russell 2000 index, which measures the small caps in America, that surged nearly 2%, and it's as a 6-month high. Meanwhile, the VIX index, which reflects market volatility expectations, it's calculated using option values, continued its decline, reaching yet another low level, very low level, indicating that the market is extremely complacent towards risk. The Japanese yen strengthened last night after Scott Bessent's comments about the lower US interest rates, and the US dollar weakened. The dollar weakened from about 98 point something on the DXY index to 97.3, so the dollar was down about 1%, and the Japanese yen was up about 1% this morning. So when you've got a stronger yen, and the yen was stronger this morning, it puts pressures on Japanese export companies by making their products more expensive in international markets. But it also reduces the yen value of overseas earnings when translated back to the domestic currency. So this currency impact hit major exporters last night. So companies like Toyota, Sony, and Nintendo saw their shares decline a bit more than the broader market. The broader market, which is the Japan's Nikkei 225 index, saw a decline of 1.45% this morning, falling to a level of 42,648. I'm just checking the index now. The Nikkei index is 42,626 as we speak, and it's still moving. So this slight decline in Japanese stocks needs to be seen in the context of the Nikkei index's remarkable performance over the past year. The index has gained 25% since the beginning of this year. Chinese stocks carried on up slowly but surely. The China Shanghai Composite Index was up very slightly at 0.11 at 3687, close to a psychologically important 3,700 level, which is a 4-year high. The reason for the Chinese slow but steady advance is growing confidence in China's economic recovery prospects. And technology stocks in China are doing well. So, for example, Tencent, which is quoted in Hong Kong, gained 2%, again following the better than expected quarterly results. The Tencent, which is a gaming and social media giant, had a 15% increase year over year in revenue, and it had a very strong performance in its gaming division, and it continues to make investments in artificial intelligence. Now, if you want a cheap way to get into Tencent, the Dutch company Proces NV, which is the largest internet investment company in the world, Proces NV owns a very large stake in Tencent. It's more than 50% of Proces, and the shares of Proces are trading at a very large discount to its net asset value. So in Hong Kong, the Hang Seng Index traded nearly flat. So on the positive side, we had strength from the Chinese technology companies quoted in Hong Kong. And of course, Tencent can continue to help. South Korea's Kospi index declined slightly, 3,222.66. Australia's S&P ASX 200 index had a strong performance amongst some Asian markets, gaining 0.57% to 8877. And the reason for that was better than expected employment data. It showed the unemployment rate declining to 4.2% in July, and it showed employment improving. So that helped also the Australian dollar a little bit. Gold inched up a couple of dollars to 3,359, 3359. Rising gold price helps gold miners, which is a very undervalued sector. If you keep your eyes on my video channel today or tomorrow, I'll do a video about gold mining stocks. I have a couple of gold mining stocks which I think are set to absolutely go to the moon. They're large, well-run companies which are extracting the gold from the ground and are going to see we'll have more gold coming out next year, and we'll see their earnings per share rocket. I would just like to mention that nothing I'm saying in this video is meant to be investment advice. So if I tell you that I think a share price is going to rocket, I'm telling you that because it's my personal opinion and I might be wrong. So don't rely on what I say, do your own research. And while I'm on the topic of gold and gold mining stocks, if you're interested in gold, you can click on my affiliate link below, which has got a free guide to buying gold. It's an investment guide. That's from Gold Bullion Partners, who are my affiliate. Bitcoin had a remarkable performance in early Asian trading today, August the 14th. It touched in Asian trading an all-time high of $123,769. And if I look at the screen now, I see that it went above 124,000 at one point, and it's currently trading at 121,698. Why is Bitcoin going up? Well, there's several factors here. Obviously, the Federal Reserve rate cuts reduces the opportunity cost of holding non-yielding assets like Bitcoin. And then we've got the weakening of the US dollar, making alternative stores of value more attractive. Now, when I talk about a store of value, I know some of you will disagree with that, but I think there's no doubt that Bitcoin has become an asset class. It's widely held by institutions, by private individuals. It's quoted on the media non-stop. So it is an asset class of some sort, but there will, it's become very tribal. There's many deniers who, claim that it's completely worthless. It's going to nothing. My only question to those people are, if you're a financial advisor, is your job to spot the opportunities? And if so, are you just trying to justify why you didn't spot the opportunity 10 years ago, 5 years ago, 3 years ago, 2 years ago, or 6 months ago? Maybe. So what else can we say about Bitcoin? We've got major corporations and investment funds starting to allocate capital to digital assets like Bitcoin. And there's a growing confidence in the regulatory environment, particularly in the United States. Recent developments are suggesting that policymakers are becoming more comfortable with digital assets. And as we know, the Trump administration's approach to cryptocurrency regulations has been supportive of innovation, whilst maintaining appropriate oversight. So this regulatory clarity is helping digital assets in general. So Bitcoin has kind of moved from a speculative asset to more of a store of value, competing with traditional assets like gold or treasury securities. And institutional investors are starting to use a bit of Bitcoin in their portfolios. Otherwise, we're reaching the end of the report for today. The 10-year Treasury yield fell very slightly to 4.25%. I'm just checking here on my screen to see what it says. If it's changed, 4.21% at the moment, slightly down, obviously reflecting the expectations of a rate cut from the Federal Reserve in September. Ladies and gentlemen, thank you very much for that. If you'd like to hear more reports and for me to keep doing them, please click the thumbs up and your subscribe button, and I'll try and answer any comments for the next few hours. Thank you very much, ladies and gentlemen, and bye for now.